many traders just struggle? I mean, they've got endless indicators, tons of strategies, but it's just not clicking. Well, the answer isn't about adding more complexity. It's about a simple, powerful framework. So let's break it down and build that framework right here, right now. I mean, this is the elephant in the room, right? You see the potential, you're studying the charts, but that account balance just keeps ticking the wrong way. And that frustration, man, it sends traders on this wild goose chase for some kind of magic bullet. And this is what that chase looks like. People hunt for more complex indicators, some secret holy grail strategy, or they just follow some guru's calls. But the source material for this explainer is crystal clear. The real answers, they're not out there, they're inside you. It's all about mastering your own mind and building a simple, repeatable process for reading the market. So yeah, forget the holy grail. Success isn't some hidden secret, it's a structure. And that structure is built on two fundamental pillars that support everything, and I mean everything you do in the market. And here they are, simple as that. Pillar number 1, you've got to master your inner game. You have to win the battle inside your own head. Pillar number 2, you need a super straightforward way to read the outer game, to understand what the market is probably going to do today. You master these two things, I'm telling you, it changes the entire game. Alright, so let's dive into the first pillar. And honestly, this is the big one, because without this, no strategy in the world is going to save you. The first and by far the most difficult opponent you will ever face in trading is the person staring back at you in the mirror. So how do you do that? Well, the source material breaks it down into 4 key rules for a bulletproof mindset. We're going to touch on all of them, but let's really zero in on the 2 that act like bookends for every single trade you make. The prep work before you get in, and the review right after you get out. This first one, the just-in-case rule, it is an absolute game changer. Before you even dream about the profit, you have to look the potential loss right in the eye. You have to force yourself to ask, okay, what if I'm dead wrong on this? And then figure out exactly what the damage will be. This isn't about being negative, it's about being a professional. Now here's what's so critical about that. There's a huge difference between an expected loss and an unexpected one. An expected loss, that's just the cost of doing business. You've planned for it. Your mind has accepted it. But an unexpected loss? Whoa, that's totally different. That's what hijacks your brain. It triggers panic. It makes you start hoping and praying, and it completely demolishes your discipline. That's how a small, manageable loss spirals into a catastrophic one. And wow, this quote from the source material, it just hits the nail on the head. An unexpected loss is like a bullet wound. It creates this huge psychological hole where hope, fear, and panic just rush in, causing your discipline and your account to bleed out. That just-in-case rule, that's your armor. Okay, so the trade is over. Win or lose, it doesn't matter. The work is not done. This is the final rule, and it's probably the most powerful tool for growth you have. Look, your trading journal is so much more than a diary of your trades. It's your personal coach. It's your data analyst. It is literally your fastest path to stop making the same dumb mistakes over and over again. And check this out. This is the compounding effect in action. On day 1, you make a mistake, you write it down. By day 3, you've already avoided that first mistake and probably found a new one to work on. By the end of the week, you're systematically stripping away your bad habits. You are actively reprogramming yourself to be a better trader one day at a time. It's powerful stuff. Okay, so once we start getting that inner game locked down, it's time to look outward. How do we get a clean, simple read on the market without cluttering our charts with a million confusing indicators? Well, the answer is to focus on just one simple concept, the daily bias. Basically, this is your hypothesis for the day. Are the big players more likely to push the market up or down today? Look, we're not trying to be fortune tellers here, but we do want to put the odds in our favor by aligning ourselves with the most probable direction, all based on simple clues from yesterday. So how do you actually find this bias? It's beautifully simple. Just look at the body of yesterday's daily candle. If that candle closed above the high of the day before it, then our bias for today is bullish. We're looking for buys. If it closed below the low of the day before it, our bias is bearish. We're looking for sales. That's it. Simple, clean, and incredibly powerful. And we can get even more specific. The size of yesterday's candle tells a story. Think about it. If yesterday was a massive, explosive day, and we open today somewhere in the middle of that big range, the market is probably tired. It's exhausted. You should expect a quiet, choppy, sideways day. But if yesterday was a tiny, quiet little candle, the market is like a coiled spring, just waiting to explode. Expect a big, volatile move is coming soon. Okay, so we've got our inner game, mindset. We've got our outer game, reading the market. Now, let's put it all together into a practical process you can use every morning. This is your blueprint for a professional trading day. This is it, the complete loop. This should be your non-negotiable routine. Step 1. What's my daily bias? Up, down, or sideways? Step 2. Plan the trade and apply that just-in-case rule with a hard stop-loss. Step 3. Execute. Pull the trigger without hesitation or second-guessing. Step 4. The most important one, review. When it's all over, open the journal and learn the lesson. Win or lose, you get better. And that right there brings us to the final and maybe the most important question of all. The path is clear. The two pillars, mastering your mind and reading the market,